The dividend stock we're going to be looking at today has a high dividend yield, double-digit dividend growth, an excellent Simply Safe dividend score, and the company has raised its dividends for more than 25 years, meaning it is a dividend aristocrat. So basically what every dividend growth investor and his or her mother is looking for. Stick around until the end because I will do an in-depth analysis of the dividend sustainability, revenue, earnings, debt, management quality, moat and so much more. Hi and welcome to my channel. This is Tom from the Dividend Attitude. In today's video we will do an in-depth analysis on a regional bank called BancFirst. This is the first video where I will do this kind of analysis on a dividend aristocrat. I will be making more videos with in-depth analysis of dividend aristocrats. So if you have any specific aristocrats you would like me to cover, please let me know in the comments below. For now, let's get started. First we're going to take a look at an overview of some important metrics and then we will dive in deeper to compare the performance to competitors, take a look at management, their business model, their moat and so on. The first basic checkup I like to do as a dividend growth investor is to look at the dividends. How much have they grown and how sustainable are they? This dividend aristocrat has a current dividend yield of 3.24%, a 5-year dividend growth rate of 13.8%, a 41.3% earnings payout ratio, and 27 years of dividend growth under its belt. So that looks excellent so far. There's a reason why I'm not looking at the free cash flow payout ratio for this stock, because like I also mentioned in episode 19 before, free cash flow is not a reliable metric to look at for banks. Another thing I would like to check is the Simply Safe dividend score, which for this stock stands at a maximum score of 99. But then what is the price performance so far of BancFirst? Taking a look on fast graphs at the time frame from the start of 2015 until the end of 2019, we can see that this stock has returned an impressive annualized return of 16.1% versus 11.1% for the S&P 500. Now from the start of 2015 until year to date. There we see a bit of a different picture with an annualized return of 6.3% versus a 9.8% return of the S&P 500. It tells us that the S&P has recovered quicker from the recent downturn than BancFirst has. So we have to check if this is justified or not. Then I like to do a basic checkup of the financials. The revenue and net income of BancFirst is growing. Its revenue has grown at an average of 7.7%, the net income at 14.5% over the last 10 years. Later on we will look at the trends to see if there are any warning signs. The debt to equity in 2019 was 0.03. Whoa, another great sign. If you liked the video so far, don't forget to give the video a thumbs up and make it turn blue. It will help to get my content out to more people. Since last time the community has grown a little bit again and there are now 241 people who like my content enough to subscribe. Thank you very much. If you also want to stay updated on future videos, don't forget to subscribe as well. This bank became an aristocrat 2 years ago and has raised its dividend for 27 years. The earnings payout ratio is 42% and has been quite range bound between 35 and 45% in the last few years. So again, this is excellent for a bank. Like I mentioned before, the 5-year dividend growth rate is 13.8%. The 10-year dividend growth rate is 10.7%, but the most recent dividend raise was only 6.7%. So that's something to keep in mind. Like I mentioned before as well, BancFirst has the maximum dividend safety score of 99. Factors contributing to that are the continued dividend raises during the last recession, the low debt and the consistently low earnings payout ratio. So what is the company all about? BancFirst provides a wide range of retail and commercial banking services, including commercial, real estate, energy, agricultural and consumer lending, depository and funds, transfer services, collections and safe boxes and so on. And the services are tailored for both individual and corporate customers. Through its technology and operations center, BancFirst provides item processing, research and other correspondent banking services to financial institutions and governmental units. This bank operates through 5 segments: metropolitan banks, community banks, Pegasus Bank, other financial services, executive operations and support. BancFirst's strategy focuses on providing a full range of commercial banking services to retail customers and small to medium-sized businesses in both the non-metropolitan trade centers and cities in the metropolitan statistical areas of Oklahoma. BancFirst operates as a super community bank, managing its community banking offices on a decentralized basis, which permits them to be responsive to local customer needs. On one hand, BancFirst generally has a larger lending capacity, broader product line and greater operational scale than its principal competitors in the non-metropolitan market areas, which typically are independently owned community banks. And on the other hand, in the metropolitan markets served by BancFirst, the company's strategy is to focus on the needs of local businesses that seek more responsive services than are available at larger institutions. So how about competition? Each bank location competes with other banking institutions, savings and loan associations, brokerage firms, personal loan finance companies and credit unions within their respective market areas. Some of BancFirst's competitors are Customers Bank, First Commonwealth Bank and Bancorp. And of course, they also face competition from the big institutional banks. Its commercial loan customers are generally small to medium-sized businesses engaged in light manufacturing, local wholesale, retail trade, commercial and residential real estate development and construction, services, agriculture, and the energy industry. Management believes this company has an advantageous competitive position operating as a super community bank. BancFirst manages its banks in a decentralized way, which allows them to quickly react to local customer needs. They enjoy an economies of scale mode compared to other community banks in Oklahoma, because they have greater lending capacity, and a cost advantage mode because they have greater operational efficiencies in non-metropolitan areas. If you would like to learn more on how to understand why a mode is important and how to identify them, be sure to check out episode 11, which is now suggested. Management quality can be measured by a lot of things, but I will pick a few to address the quality of this bank's management team. Management quality is important because the people in the management team are the ones that make all the important decisions to direct the company. If you want to have a complete overview of all the 10 things you can look at to assess the quality of a management team, be sure to check out episode 9, now suggested in the top right corner. Another great thing to look at is insider buying. There has been quite some insider buying recently, especially when BancFirst went down together with the rest of the market in the middle of March. Some notable ones are 10,000 shares on the 13th of March 2020 by Ronald Norrick, and Thomas Howard McCaslin III bought 18,000 shares on the 17th of March 2020. So that is always a good sign when insiders are buying shares, especially when times are tough. It means they have faith in the company. And then debt management. I don't think debt management needs a lot of analysis because with a debt to equity ratio of 0.03 and never being higher than 0.07 since 2012, the management of BancFirst is managing its debt very well. During the recession of 2008-2009, which was bank-centered, the sales of BancFirst only went down by about 13% and they still kept raising the dividend, another great sign of quality management. And then the financials. The revenue of this company went from 0.2 billion in 2010 to 0.41 billion in 2019, or a growth rate of 7.7%. Looking at the trend, it is a nice, smooth upward trend. Important is also to take a look at the most recent quarterly revenue. The revenue for this company stands at 109 million compared to 102 million in the same quarter last year. However, revenue is not the profit that the company makes and it doesn't pay the dividends. The net income went from 0.04 billion in 2010 to 0.14 billion in 2019, for a growth rate of 14.5%. So that is even faster than the dividend growth rate, which is a good sign. The most recent net income is 20.7 million compared to 34.2 million in the same quarter last year. So that's quite a big drop. That drop mainly has to do with something that is called a provision for loan losses, which for this bank is up 8 to 9 times compared to the same quarter last year. This item on the income statement describes the estimated amount of loans that can't be recovered. The thing is, with the current crisis, it is very hard to make an estimate on that, and it's counted as a deduction on the revenue, so it could be better or it could be worse. The return on equity of this company stands at 14.14%, which is on the high end of their 10-year average. Compared to the competitors, they are doing very well based on the return on equity. In fact, they have the highest return on equity in this group. There's no return on invested capital, which is quite logical for banks, since most of their funding comes from deposits made by customers. So return on invested capital is not a meaningful metric to look at for banks. The same applies to the operating margin. This is not a meaningful metric either to look at for banks, because the interest is a core component of their revenue and expenses. When you're looking to invest into a company, it is of course important to understand the risks that this company could face. BancFirst faces several risks that you need to consider before investing into the company, of which I will highlight a few, all of which come from the annual report of BancFirst. The first one is changes in economic conditions, especially in the state of Oklahoma. Since BancFirst is a regional bank that operates mainly in Oklahoma, it is dependent on the economic growth of Oklahoma. The second one is failure to keep pace with technological change, which could adversely affect the results of operations and financial condition. The financial industry is undergoing technological changes at a fast pace. So if BancFirst is not able to keep up with that, it could be a problem. The third one is changes in consumer use of banks and changes in consumer spending and savings habits could adversely affect the financial results. This again comes back to the second point of technological advancements, which allows customers to make financial transactions without the use of banks. To mitigate those risks, BancFirst acquired Pegasus Bank in 2019, which also has locations in Texas. BancFirst has a product development group which develops and enhances products and services based on the needs of their customers, which they can monitor closely because they are composed of local banks with local knowledge. It is important to understand when analyzing a bank to know how a bank actually makes money. Commercial banks like BancFirst make their money from service charges and fees, for example monthly maintenance fees, overdraft fees, deposit fees, etc. Banks lend out the money that people deposit and they typically also make money from that because the interest rates they offer to their customers depositing are lower than the interest fees they charge customers for loans. This is called the interest spread. Other than that, banks also have to make an estimate of how much loans will likely not be recovered. This is listed as provision for loan losses, which I already mentioned in the net income portion as well. And then the valuation. Fast Graphs is showing BancFirst as clearly undervalued. The black line is the price and the price is below both the blue and the orange line, showing a clear undervaluation at a price of $39.50. The expected annual returns do look pretty good as well, with a 19.6 annual return until the end of 2022. Putting a value on a stock with a dividend yield theory, it shows us that the current yield of 3.28% is right on the cusp of being undervalued. Fair value would be around $64 according to the dividend yield theory. If you want to learn more about the dividend yield theory and how it works, be sure to check out episode 12, which is now suggested in the top right corner. Finbox has a fair value of 43.54 for BancFirst, so the current price of 39.50 is well below that. I think the fair value of Finbox is somewhat on the low side, and based on my own assumptions with the dividend yield theory in fast graphs, I would estimate fair value to be in the $55 to $60 range. When you're analyzing a company, it is not enough to look at the past. The past can only be used as an indicator for the future. Since this stock is not covered by many analysts, we cannot fully rely on its estimates. But analysts on fast graphs are estimating a 3% growth rate in 2021 and a 21% growth rate in 2022. Looking at the analyst scorecard, it is very obvious that BancFirst has beaten estimates every time since 2010. And full disclosure, I did recently purchase BancFirst for $39.34 because I like how the company is run and how their financials look like. I also estimate them to be severely undervalued at that level. I hope you enjoyed this first in-depth analysis on a dividend aristocrat. Again, let me know in the comments below which other dividend aristocrat you would like to see analyzed. If you want to learn more on analyzing dividend stocks, be sure to check out my playlist on how to find and research dividend stocks, which is now shown in the bottom right corner. Until next time, bye bye.